The goal of trading is to become consistently profitable. However, this has proven to be a challenge because the stats say 90% of traders lose money. And it's not that they don't know exactly how to trade, because every trader out there understands price action. But there is one thing that is not clicking to 90% of traders. And if you've been trading for 1 year, 1 month, 10 years, it doesn't really matter. As long as you have not discovered that connecting thing that will connect your price action to consistent profitability, you will never make money in the markets. Trust me. And in this video, we are going to look at exactly what it is you are missing in order for you to become consistently profitable. If you are new to the channel, subscribe. Let's do this. Number one is the beginner. Now, if you are a beginner watching this video, that means you have no experience in the market. The first mistake is you have no clue in the market. And since you have no clue in the market and you are also human, you still want to make some money, but you have no clue in the market. The mistake is you have no clue in the market, but you still expect to make money in the market because you have learned a few indicators, you have learned a few patterns, you have learned a few candlesticks, and we all do that. That's part of the game. Number two is that you want that quick money. And it's because you see guys flaunting. I made 10K, I made 20K. In order for you to make 10K, 20K, even 1K, even $100, you need to have put in the reps in the market. And it does not come just like that. Number three is that you don't really understand how much work is needed for you to actually cross over from being inconsistent to being consistently profitable. And I can't really explain it to you. You just have to put in the work. Second type of guy is the price action pro. You've been looking at the markets for 6 months, 1 year. You understand the market. You've been on and off because you've been blowing up your accounts. Now, you still use some indicators to tell you exactly where the market is headed, when to get in, when to get out. But you're still not getting the results. So this causes you to go to YouTube to find other strategies that might work for you. And this is where now you start cementing the bad habits that 90% of traders do build. Even me, I built those habits and I had to rewire my brain, which I will show you how I did that later on in the video. And then now once you start looking at all these different strategies, you start to see the potential, because now you see people making money using specific strategies. However, you become a strategy whore. You are jumping from one strategy to one strategy to one strategy because they all look so simple. They all look to be working. But when you are doing it, you are not seeing the progress. Now you are stuck in this loop. And if this is you, trust me, you can get yourself out of this loop. This loop goes like this. Number one is you learn a new strategy. So you see me explaining my strategy, it looks so easy. You think, oh, I want to do that strategy. Then you learn the strategy, the basics, you start making money. So you make money for 1 week, 2 weeks. And then the drawdown period comes. You see 2 consecutive losses. You panic, you realize, oh, this is not working. Then you jump on to the next strategy, or you go back to the previous strategies, or you try to add some nonsense to the strategy to avoid the losses. And this becomes a cycle of avoiding losses. So how exactly do you get yourself out of this loop? Number one is you need to understand that the goal of trading, regardless of which strategy you use, is to become consistently profitable. And consistency is just doing the same thing for a long time. Think about walking. You get from point A to point B because your legs take one step at a time consistently until you reach your goal. And so these are the exact steps that you need to take. And number one is we pick a strategy. There are so many strategies out there. Pick a strategy and commit to it. Number two is you need to find a mentor. Now, a mentor is a guy who is using that strategy and is consistently profitable. So this is one criteria you need to use to identify good mentors. Number one is look at the content they put out. is it consistent? Are they taking the same trades over and over and over and over again, using the same strategies, or are they changing strategies here and there? So once you pick a mentor, you don't have to pay him. You just need to focus on what he is putting out. And so focus on the process he is using. And if you have some money, I highly suggest you invest in some one-on-one mentorship with the mentor so that he can guide you one-on-one. Once you know exactly what you are looking for and you have that guidance, now you get to work. Now, the work is just applying the strategy for a long time. The next most important thing is risk management. Bro or sis, if you don't have an account, there is no way you are going to make money in the markets. And so you need to protect your capital by applying sound risk management. If you have a prop firm, you know this very well through experience. If you've blown several accounts, I have, and I understand this. And so the point is you risk 1% to get 2%. And in fact, if you can make 2% per month, that is all you need to be comfortable. Because if you have $100,000, then 2% is $2,000 a month. $2,000 is way too much money for all of you, because right now you are not making any money. So 2,000 is better than $0. That is what successful day traders are doing out here. And so now let's talk about the strategy, my own strategy. So this is the part where now you can leave if you don't follow my strategy. But if you're interested in learning how I trade, then the next part will be me explaining my strategy. Now, I also do have a one-on-one mentorship if you are interested in joining. Right now, the classes are full. You will have to wait for some time before I finish with them. But I will put a link in the description. Just reach out to book your slot so that once the slots are open, then you have the first priority to join. All right, now let's talk about the strategy that you will be using to make 2%, 3% consistently each month. Step one is the weekly template. So how do we know where the days are headed in advance so that we can prepare ourselves to catch those moves when they do happen? And so I use TradingView for my analysis. I also only use the 15-minute time frame for my analysis, nothing else. So I have some settings that are different from others, like my time is New York time. So you can set your TradingView for New York time so that it's far much easier to follow the sessions. I also have an indicator called session breaks. You go to settings, then events, then check your session breaks. Now, this is not available to everyone. I don't know why, but if you have it, then you have an advantage because it shows you when the day begins and when the day ends. The weekly template. So Monday will always set the high and the low of the week. What does this mean? So that is our low of the week, that is our high of the week, and then the day closes there. On Tuesday, we are also not interested in trading. But Tuesday, most of the time, will usually tell us what will happen on Wednesday. And so on Tuesday, what we want to see is price breaking out and then closing back inside of the range. Now, when you look at this on a candle time frame, on the daily time frame, and so that is the daily candle on Monday. On this day, we have this daily candle on Monday. Sets the high, we have the low of the week there. On Tuesday, price, what we want to see is price breaking out and then closing back inside of the range. This means that on Wednesday, there is a very high probability price will continue in this reversal direction back to the low of the week. So what happens? And so we will sell on Wednesday. And this is what we call the weekly cycle. Now, this same thing can happen. This can be Wednesday, then Thursday, then we sell on Friday. It can be Thursday, Friday gives us a failed breakout, we sell on Monday. For example, today is on a Monday and we are looking to buy on GBP USD. Why? Because on Tuesday last week we had this low of the week. And then on Thursday, price breaks out and closes back inside of the range, giving us a failed breakout. and a failed breakout is a buy signal on Friday. Now, if we stay within the high and the low of the range, we just stay within on Friday, then that means we can continue buying even on Monday. And so this is what we call the weekly cycle. And to understand this more, I have a free masterclass. Link will be in the description. You'll go check it out after this. Now that we know how to predict where the next day will have a high probability of going, how do we prepare ourselves so that we can capitalize on this edge that we have in the market? And so when we come to the screen, we don't just willy-nilly take trades because we know where the market is headed. We have a system that the market needs to follow. If the market follows it, then we have an advantage in the market because the strategy has about a 50% win rate. So we know, regardless of whether we have losers or winners, we will still be in the green at the end of the month. And so when we come to the screen, the first step is time. We come to the screen at very specific times. For Asia, we come to the screen between 9 and 11 p.m. This is New York time. Then we come in the London session between 3 and 5 a.m. New York time. And then for New York, we come to the screen between 9 and 11 a.m. New York time. So once we come to the screen at this specific time, the next step is we identify the highest point and the lowest point price has reached that day. That is the high of the day and the low of the day. And in our case, for example here, we see that this is the highest point, this is the lowest point. This dotted line is when the day began. The indicator that I told you about called the day separator. The indicator that I told you about called the session breaks. So the highest point from the session breaks and the lowest point from the session breaks, that is our high and that is our low of the day. Then the next step is identifying our levels. Now, a level is just an area where price has been moving sideways, at least 2 bounces on a horizontal line. For example, if we look at our situation here, we have price creating higher highs, and then on this low here, price comes to that low once, then comes to that low again before breaking structure and continuing to the upside. So this is a level where price is consolidating. And so we have identified our high and our low, and we have identified a very clear level that price is consolidating on. The next step is now looking for our entries. Now, our entries, we are breakout traders, which means we identify levels, and then once we break below those levels, we get in because price moves from one level to the next level. There is no in between. So how does that look like? So looking at this price action, we have no idea where price will go. But in our head, there are some criteria that must be met in order for us to get into the trade. And our criteria is, if I am selling, I want to see price come back to this level and break out and close below that level, like that. And so if price does not do this, then I have no business taking this position. But if price does this, then obviously I will be in the trade. Let's look at an example of GBP CAD on Friday. We were looking to buy in the New York session. So when we come to the screen in the New York session, the time begins at 9 a.m. New York time. So before 9 a.m., we identify our high, that is the high of the day, and then we identify our low, which is that level there. And then we ask ourselves, do we see any area where price is consolidating? Now, we have this area here where price, we have 2 candles bouncing off of, like that, before going down. And then down here now, in our timing window, now in our session, we also have this area here where price is bouncing off of. And so once price breaks above this area here, that is your entry as price is breaking out. That is your entry. Stop loss is below this candle. So when we talk about our stop loss or our exit strategy, we know that if price comes back to this level, then we are wrong and we are good to say, okay, we will cut our trades here because we are no longer willing to lose money past this point. And then our target, we target a 1 to 2. We want our risk to reward ratio to be at least 2 in order for us to be able to cover the losses that the strategy has. So each trade has a 1 to 2 risk to reward. And the only way we exit is we set and forget. And so if we get in here, we put our target on the next level, then we set and forget, we move on to other things. So if you are tired of the cycle of jumping from one strategy to the next, not sure whether you are going to make money or not, then check out the one-on-one mentorship. Link will be in the description. And if you got value from today's video, subscribe